Hi, everyone, and welcome to the Amber Data Derivatives Podcast. I'm here with Hendrik, one of the co-founders of a new derivatives exchange called Thalex. Thalex offers perpetuals, futures, and options. Hendrik, how are you?
Doing well, you sir?
Doing well, doing well. So, Hendrik, you actually have a really interesting background. You've been in the crypto space for a while. I thought maybe we could just start there and just get to know you as one of the co-founders of Thalex, and then we'll dive into
Yeah.
Thalex.
Yeah. So I actually started my career back in '09, in the summer of '09, so right after the crisis, in equity institutional brokerage. Did that for a few years. It was an interesting time where you saw like the first wave of sort of macro tourism, as people were very concerned about inflationary effects of QE.
Mm.
So you saw a lot of people looking beyond equities at like farmland and precious metals and commodities. So I did that for 3 years, and then I moved back to Brussels, working at NXMH. Spent the bulk of my career there. And so at NXMH is this family office managing the money of a South Korean entrepreneur, and we sort of had a private equity sized fund, but I would say a mandate with a lot more degrees of freedom. So we could essentially invest in anything we wanted as long as we approach things differently. And so did a lot of things ranging from consumer private equity to VC in food tech, like the impossible food and beyond meat trend.
Oh,
We
wow.
jumped on at a point. Invested in pet food businesses, in high yield junk debt. So like really sort of covering a lot of different asset classes. Now in late 16, early 17, this ultimate beneficial owner really wanted us to start looking into crypto, exploring the asset class. As many would argue back then, it makes sense to invest like a few percent of the portfolio in there. Now, the interesting thing for us was that gave us spending power in the hundreds of millions to also not just buy coins but also companies. And that sort of culminated into first, I would say, crypto majority buyout. I think that was Corbett it was early 17 that we did, sort of the Bitstamp of Korea, I would say.
Cool.
And then soon after we started looking at other exchanges across the world. Europe seemed like a good spot, and got started in negotiation with Bitstamp late 17. And that was really sort of the point where I started full-time focus on crypto, was really the due diligence of Bitstamp, which was a very interesting and long, arduous road. Really due diligence a crypto business, if you come from a digital background, is a lot about figuring out all the rules that you can break to actually still get a deal done. I think we just ultimately really focused on was, do they have bank rail secured? Can they operationally scale up? What's the chance of them getting hacked? And then the tricky bit was of course, valuing the business. Normally in private equity, you project revenues and you do cash flow modeling around it. Usually it's sort of your revenue growth slows down a little bit over time, but your margin increases, and that's sort of every financial model. With an exchange, with a crypto exchange, your top line is completely stochastic. It's fully a function of external market forces, and so the way we kind of valued Bitstamp at the time was also like an option in the sense that you simulate volume based on a random walk, and you look at sort of what is the break even volatility. What if we assume zero drift? Does the equity price that we're paying, does that actually make sense if we simulate all the possible outcomes that this exchange could have, right? And I think, and that's still the way I look at a lot of crypto businesses today. I look at Thalex. It's a lot of them are sort of these businesses that are structured like options, and you have your fixed costs, and that's sort of the premium you pay to be exposed to gamma, and then most of us ultimately make probably like 70-80% of our money in the bull market, and that bull market happens every 3 years, and so really it's about being at the right balance of burning cash so that you're ready to scale up when that market starts to heat up, but also not burn too much so you die before the bull market, right?
Yeah,
Um,
that's really interesting. So just to kind of recap on my understanding, so the fixed costs of running a business, those are a lot more predictable than say the top line revenue, which is really
yeah,
dependent on the bull market, capturing market share. adoption or new competitors coming into the market, stuff like that. So that's
Yeah.
sort of the stochastic process where everything is kind of a part of a distribution, and then you see basically, okay, under all these scenarios, does my fixed costs does the company survive despite these fixed costs? Is that type of the idea, sort of the idea?
Yeah.
Oh,
Yeah,
that's
exactly.
interesting.
I mean, it's um, yeah. I mean, to take an example like Bitstamp, right? How do you value something that like in 16 it made maybe like 5 million revenues, and then in 27 it made 88, and then it was
Whoa.
like early 2018 it was still trending to ultimately go a lot higher than 88. And but then you realize that over a 3-year cycle, right? If you take the bull and the bear, and then sort of the sideways mid range, you make most of your money in 6 months of bull market, and so I think what a couple of companies actually have subsequently done probably better than Bitstamp, I think Kraken, for instance, or Coinbase, is that you have to realize that you sort of have to over-invest, right? Be sort of overpaying, or have an organization that's a little bit too fat in the sideways part, so you can actually better capture value in the bull market in terms of just having scale to really onboard customers, or just or push out product.
Oh,
And
that's
that's
interesting.
another like big thing with which is crypto, is that for every alpha there's a lot of beta, right? Like if
Mhm.
you, for instance, Coinbase in 2019 they listed altcoins. In the beginning, nobody gave a shit, right? It was like less than 2% of their volume. I remember in Bitstamp discussion we're like, oh, they're actually taking a lot of regulatory risk for no return. But then really it was about like having this option on first of all the bull market interest, that all of a sudden those pairs can be a significant percentage of your volume, and ultimately paid off for them as well tremendously, because when Binance had to delist essentially in the US, all of all those customers that were sort of shaken loose had to look for a new home. They A lot of that went to Coinbase, right? So it's a lot of it you have to think about sort of options and asymmetry, rather than thinking of like these more linear risk return payoffs.
Yeah, that's fascinating. So just again to recap for my own understanding. So when we're a sideways market, it's good to have a little bit of fat in the sense of like having extra employees and stuff like that. When we're in bull market, everyone quits and does their own thing. It's hard to keep employees. And
Yeah,
then you can invest in another like new line of business, such as altcoins, which is basically like buying like an out of money call on your
yeah,
business. And so if we get
yeah,
the bull run again, that volume, that trading volume in altcoins will come in and generate fees. That's
yeah.
super interesting. So you have a background essentially, looking at Bitstamp, valuing it, buying it. Now you're on the board of Bitstamp, is that right?
Yeah, still, yeah, yeah,
Cool. And so now, instead of doing the acquisition route into an exchange, you and your team are building an exchange from the ground up. So maybe you could talk
yeah,
about some of the opportunities and challenges that you see building a derivatives exchange such as Thalex.
yeah. Yeah, let me actually just maybe give you sort of the origin story of
Sure.
Thalex. It was actually started in the aftermath of March 2020, and started really as kind of a joint venture between the key people of two market making firms that are focused on crypto. One is are the people behind BlockTech. They're a crypto option market maker. They're very significant in the on Deribit, on Paradigm. They're well-known guys there. But essentially, right after the liquidation cascades in March, they were like, okay, we're this crypto-focused option market maker. If Deribit essentially doesn't regain trust,
Mm.
we're actually going to be starved out of a market opportunity here. We need alternatives. And they teamed up then with the people behind Metrics, which is there was some family ties between some of these key people, and Metrics is actually one of the earliest Delta One market makers. Actually, one of the first guys to really do automated trading strategies in crypto.
Mm.
So it's around since 2013, 2014. And their expertise is spot Delta One. And so the idea was like you build a better version of Deribit, and you have from the beginning this strategic alliance with a provider of option liquidity and then Delta One liquidity. And then to sort of round up the project team, they recruited two people from former Optiver backgrounds. Sort of the two architects of Thalex. One was a very well regarded software engineer who coded up the system, and the other was a trader who essentially thought of all the specs, the risk models. And really, the code name then was build dairy better, just do linear contracts, and take some of the best of breed examples from a lot of other exchanges, right? So you have linear stablecoin settled options, but you have multi-collateral. You think about good portfolio margining, you think about sensible liquidation models. And then really from the get-go was engineered as saying, okay, we're going to offer perpetuals, futures, options, but ultimately also make sure that we can integrate combinations, right, via future roll order books and also RFQs. So the project there really kicked into gear, I would say, in the second half of 2020. That's also when I started talking to the team and sort of joined as a late co-founder. And then with my background, what I had to do is sort of think of the liquidity bootstrap strategy for Thalex, as well as the regulatory strategy. And and the core idea and the core challenge is that liquidity bootstrap, right? You are a crypto options derivatives exchange. You also need that Delta One liquidity, so you have to bootstrap both at the same time. And actually, to get to the differentiated bit of options, you first also have to convince people to just actually quote a pretty standard Bitcoin or ETH perpetual. And so that's where these strategic alliances come into play. They're helpful. But really also, a key insight I had at Bitstamp was that they kind of lost a lot of market share to derivatives competitors, first BitMEX, then Binance and Bybit. But the interesting thing is it's not really losing customers. I call it like a form of silent churn, where a lot of these customers remain active, but they're just restricting the usage of a spot exchange like Bitstamp just to do the fiat the fiat deposit in, convert to crypto, and then immediately withdraw back to Binance and Bybit. And actually, at that time, about a third of the withdrawals were just essentially deposits into Binance. So you're just an on-ramp, and you're no longer used for the job of trading. You're just the job of funding and collateral management to then go and trade on Binance or Bybit or whatever. And so then the idea was like, well, these spot exchanges, they would actually need a partner in derivatives to be able to compete and regain some of that market share. And back in those days when I really looked into this, I sort of estimated that Bitstamp could double revenue of that derivatives partner, even if they share a lot of that revenue with the partner in question. Just by regaining back like customers for the job of trading, in which case like your revenue capture is just a multiple of somebody just doing an in and out transaction. And so that was the insight where I saw like that's a win-win for an exchange like Bitstamp. And then for Thalex, the advantage is you just get access to a lot of existing customers in one big batch, and you can really accelerate your liquidity bootstrap rather than have to rely on sort of the slow awareness building and just on referral affiliate programs alone. And then the best thing is, of course, that you also make it better for the user, right? Because you have this multi-exchange customer journey where you then say, okay, let's remove friction out of it, right? If you have you've already submitted a lot of KYC information to a spot exchange, so let's actually in the onboarding process just ask you incremental questions and do a lot of the sharing via the back end, so you don't have to do that twice. We in the integrations we make the transfers just feel like sub-account transfers, and they're also made free. And so you essentially take a lot of friction out of that user journey, which ultimately benefits the end customer. And then the big hope is that that in conjunction with also just being able to attract people directly, you can just onboard with us. We'll also do the standard referral and affiliate programs. And then sort of these exchange partners are supposed to function as, I guess, both the acquisition channel of new customers as well as an awareness and a trust channel to just promote direct onboardings. And then what you hope is that you just get like, even if you just get single digit conversion of these customer bases of a spot exchange, you'll actually have a successful bootstrap. Now, I mentioned Bitstamp a lot in the past, but really the thing that actually is around the corner is much more of the Bitfinex integration. And Bitfinex has been a great supporter of us. They're our largest external shareholder, and they've been building for the last 9 months on this integration. The code is nearly done. And so we hope to get that live in sort of a private beta this summer, and then really activate that go to market as soon as we validate that everything works as intended. But I would say that is, the way we're trying to solve this most difficult challenge of any just new crypto exchanges. How do you get that taker flow in? And the issue is that yeah, to get there, right? There's so much that you need to build first, right? There's so much you need to build a company first, and you need to align all these market makers. You need to have your control functions ready. And so there's a very long lead time, I would say, between your idea of the exchange and actually getting market feedback on it. So that's been, I would say, the toughest thing. It's just like it takes so much time to actually build that vision.
Yeah, that's fascinating. So like your co-founders already have like expertise on the market making side, and then you realize this from your experience at Bitstamp. I've seen the same thing at Coinbase as a US user. Coinbase
Yeah.
is the on-ramp. You convert fiat to crypto, and then you go elsewhere and you do the fun stuff, so to speak. And
Yeah.
so now your guys' sort of insight was like, okay, if I can bootstrap a two-way relationship, I get to bootstrap some of the users of Bitstamp or of Bitfinex, and then
Yeah.
vice versa. They remain sort of in the ecosystem. Those same users remain in the ecosystem as a partner exchange, affiliated exchange of Bitfinex and Bitstamp and so on and so forth. That's a really interesting insight. So maybe we could talk a little bit more about sort of like the details of Thalex. So right now, you guys do have everything in production; things are live, but you're ramping up sort of the efforts and essentially the offering and stuff like that. So maybe you could just talk about that, and maybe you could also touch on your insights on the crypto vol landscape as of right now. How do you see the space?
Yeah. Yeah. So the way we're tackling go to market is we try to be as sequential as possible, just, one new step at a time, so you can really, essentially incorporate feedback and fix things. So what we did is we did a soft launch already, Q4 last year. It was sort of 2 weeks before FTX. It was also an experiment to see how much organic traction we would have. And I guess FTX just completely ruined that experiment.
Mm.
But nonetheless, it's just you put something live, and then you also just learn so much more about, okay, how do I hotfix things in production. And it was good that we had like a few months of just doing that relatively silently, and really learning also how to, as an organization, adapt to the fact that you have a platform that's live and turning 24/7.
Hmm.
And then earlier this year, around March, when we saw enough progress with Bitfinex, we decided to launch this liquidity incentive program, to really encourage the market makers to already start showing liquidity that's tight enough, right? Because look, once you have a great taker strategy, fine, but by the time those people onboard and convert and fund their accounts, they still need to cross a spread,
Hmm.
and that spread needs to be competitive with Deribit or in Delta One versus the other relevant competition. And so what we've done is we've launched this program that we hope is also a little bit new and refreshing. It's essentially, what we do is for eligible instruments, we'll every 10 seconds we'll make a snapshot of the order book, and we'll just score every limit order on a given order book side on how competitive it is in terms of price relative to the best bid or ask. And then yeah, we score it also linear in volume, right? For every price level, we multiply essentially your price score by how much size you're putting in. And then every limit order of every participant essentially gets a relative score of the market quality of a given order book side. And then we have a fixed pool of 100,000 tether, that we essentially then allocate over every snapshot,
Oh.
or across the eligible instruments. And so literally you get paid to wait, right? You get paid to sort of show liquidity, put in limit orders.
Hmm.
But still there's an incentive to compete for top of book, even if there's little organic volume yet, because then you can really actually increase your relative score and decrease the score of people behind you. And so we've seen really that has created like an interesting dynamic of competition between existing market makers, attracted a few new ones. It also really tested our ability to handle a lot of quotes and handle a lot of customer support requests.
Yeah.
So that's been live since late March. We plan to run that until the end of the year, actually. Yeah, it's like I said, it's sort of a way where a lot of market makers and liquidity providers actually get paid before the volume is there. And but then whenever we put it live, we hope that ultimately the execution cost versus Deribit is sort of, let's say, relatively indifferent, right? If you're a taker than a Thalex in terms of total cost of execution of your
Mm.
trade. And then that's then when you can finally differentiate on the product, right? But you have to build all these things to get to that point of differentiation.
Yeah,
Um,
that's fascinating. Just kind of broadly speaking, how deep do you see the pool of potential market makers in crypto right now?
yeah,
Is it thousands of market makers out there, or is it
no,
20 market makers? Like, how do you see it, and how does that affect sort of bootstrapping efforts as well?
yeah. So it's actually quite tough. So for option market makers, there's a lot of interest, but that space that feels like a little bit anemic, right? There's like dozen or so of relatively established crypto market makers, and they account for most of the they're most of the trades on Deribit and Paradigm. They're at least on one side, right, and
Mm.
usually in both. Then I see a lot of smaller funds that are now making an entry into crypto, but a lot of them they feel capital constrained, and so overall, I think really what the space needs is this new influx of taker and therefore a bit of innovation on the distribution side. I think that Bybit has been net expansionary in terms of like bringing new customers,
Hmm.
and I hope Thalex will be the same. But I think really to sort of get more crypto option market makers active in the space, you really need either a bull market so that there's a lot more spending power and a lot of these market makers can raise more,
Hmm.
or you know, exchanges, right? Because at this point, at these price levels, with most of them just being active on Deribit and a Paradigm, the opportunity set for option market makers is a little bit more limited. And of course, in Delta One, there's a bit more there's a lot more market making funds, but also yeah, we just have to focus on Bitcoin and ETH
Yeah.
perpetual, which for a lot of them that's not a massive opportunity.
Hmm.
But luckily we have Matrix there with support. Also, Wintermute has been an investor that's been great to us and
Mm.
has really been driving a lot of liquidity since the early days. But then I would say on what I'd love to see, and I haven't seen a lot of funds really being specialized in this, but one of the products that we're also excited about is more these cash and carry future spread,
Hmm.
right? So for every perpetual future, we have this dedicated what we call roll order book. The advantage of such a dedicated pair order book is that it guarantees atomic execution of both legs, very similar to what Paradigm's offering with Bybit. Um, the interesting bit for us though is that it ties in really well with our options markets and the focus of Delta One to be a good hedging instrument next to the options. So ideally, actually, when you delta hedge options, especially if you're maybe a positional trader or just somebody who's not very highly automated, it's actually quite annoying to have to delta hedge options with perpetuals. Actually, I'd rather
Yeah.
be able to delta hedge options with future scores of the corresponding maturity. Um, then the issue is like when you just have a perpetuals and you use a couple of futures next to it. Futures always have liquidity fragmentation because of different, time horizon bucketing. But then you put a perpetual and it gets like so much worse.
Hmm.
That's where the future roles come in because what we actually do is we build them with implied matching in and out of the outright legs. But the dominant flow should be implied out. And then what happens is that let's say you have a tied bid on the perpetual, let's say it's just 30K. And now somebody else is putting a bid in this perpetual future spread for let's say $200. Then for that corresponding maturity, there's going to be an implied limit order, an implied bid for 30,200. And if market makers, especially the specialized one, right, they can actually show like relatively tight markets on those spreads because you have those advantages that you're not
Yes.
accumulating delta inventory. It's actually relatively easy to market make in the sense that you don't have to be that worried about the speed or your or you don't have to be like the most agile market maker, right? Because the price difference between a future and a perpetual changes a lot less than the perpetual itself.
Right.
And it's very margin efficient, fee efficient, etc. So you have all these intrinsic market making advantages. And so then the perpetual plus roll liquidity implies into the future. Now, if that makes the future attractive as a hedging tool, you'll get some takers in those implied bids or asks. If then those get lifted, actually it triggers the execution of that roll order and the perpetual limit order.
Oh,
But then
interesting.
if you're doing those, if you're that market maker or you're just putting a limit order for essentially a cash and carry trade, you'll get a lot more trade velocity, right? You don't have to wait for somebody else to show up and take the opposing view on your trade. It can just be hedging demand. It's essentially entering the trade implicitly for very different reasons than you are. So
Yeah.
in a way, sort of edge preserving as well. It generates a lot more volume potentially in the roll books. So once this really gets going, I think that's also going to be a pretty exciting product. It's actually the one that I recommend a lot of people try first, because first of all, again, like you're really adding hedging liquidity to our markets. You're doing us a great service if you start quoting rolls. But also, it's an interesting, I think, product to just if you're new to options, it's a good way to start. It's a good gateway, I would say. It's similar to how like delta neutral option strategies are about like implied versus realized vol. You could think of a perpetual future spread as this sort of implied funding rate
Hmm.
if a perpetual were to be held to the maturity of the future relative to then the realized funding rate of actually having that perpetual trade on. And so you have that delta neutral combination that's actually a bet on that implied versus realized funding. It is delta neutral from a risk perspective, right? Our risk engine will label it as such and margin it as such. But I'd say that it's a very interesting trade when you have like these potential turns from, let's say, the end of a bull market, for instance, right?
Hmm.
Then if you're starting to get a little bit hesitant about how much more room a market has to pump, well, it's of course dangerous to like sell a rally too early or just like be fully directionally committed. But if you then look at some of those bull market annualized cash and carry yields, right, of selling a future against a perp or just hedging that with Bitcoin collateral, that can be double digit annualized.
Hmm.
Set up a delta neutral trade so that you're capturing that yield. But the interesting thing is if you're sort of selling that roll, if you're selling the future against the perp or against Bitcoin spot, there's also a little bit of an implied sort of put option in there, right? Because once the market really crashes, right, and you have the big liquidation cascade that's happened, for instance, after the Coinbase IPO, often that market will flip from contango right into backwardation.
Hmm.
And you then close out the trade, you have an even better, essentially, cash and carry yield than maybe initially thought, right? Then you can really get to 20-30% potentially.
Yeah, that
Um,
that's super fascinating. So we actually saw something like that. I remember one time that stuck out for me a lot was May 2021. So April 2021, we had sort of peak bull market. Bitcoin's at call it 70K, and
yeah,
the implied basis, the annualized basis, was like 30 to 40% per year. And then we had this huge crash in May 2021, and we went from plus 40% to like I think we
yeah,
went negative briefly, and so there's a lot of carry there that just
yeah,
disappears, and so you can realize that, and that's a great point about the perpetual. So I used to trade treasuries. So treasuries, if you look at a 3-year treasury, well, it's really six months treasuries of yield, and so the perpetual funding is kind of the short version of the long term future basis,
yeah,
and so you can bet on that relationship. And then
yeah,
your mechanics at Thalex are also quite fascinating. So from the market makers that I speak to, everyone basically hedges in perps because you're just delta hedging. If you're going to delta hedge with the underlying future, the spreads are so big, you're essentially going to anti-scalp yourself more or reduce your income if you're long vol. So people hedge into perps, but it's not exactly the right hedge because, as we've just talked about, the basis can do anything.
yeah,
So now the way that you guys are dealing with that is you have these rolls that allow you could just do the roll to fix your perp hedge into a futures hedge, but it
Yeah.
also translates into liquidity throughout the curve. And so now people who are just trading the futures can essentially take liquidity that was supplied from the roll quote
Yeah.
as opposed to an outright futures quote. Yeah,
Yeah.
that's really interesting. That's going to be a really nice way to get liquidity out further into the futures term structure that
Yeah.
so far has little liquidity.
Exactly. Yeah. Yeah.
Oh, very nice. That's a great sort of innovation. Is there anything else you want to talk about Thalex? Otherwise, I want to ask a couple quick personal questions, and then we'll wrap it up here.
All right. Shoot. Yeah.
All right, perfect. So, do you have any like favorite trading books or industry books that got you either into crypto or trading or sort of these micro structure dynamics of an exchange?
Um, Not so much about an exchange, but I would say, yeah, especially going into Thalex, I definitely had to read up on options myself. Um, it's funny, like in the office, we have these different copies of Sinclair and Sheldon Nadenberg floating around, but I have a very outspoken conviction that Sinclair is by far the superior first book.
Love it.
So the Sheldon Nadenberg copy, I always make a point of trying to hide that and making sure I replace it with Sinclair. So I would say, yeah, I think just start with Sinclair and then absolutely do also dynamic hedging from Telat.
Mm.
But I would say also the way to read both books is you got to read them kind of like a Bible, like just a little bit every night before you go to sleep or when you're just in transit somewhere. Just a little paragraph or two every night, I think is perfect.
I love it. And then outside of working in crypto, building an exchange, what do you like to do for fun?
Yeah, it's just honestly like at this point of the exchange, it's the work-life balance is just all work. So it's more like just doing a little bit of exercise just to just to actually be better at work. That's kind of like what it comes down to right now. Yeah.
Yeah, I love it. I
Um,
could definitely imagine that. Well, Hendrik, thank you so much for making the time and coming onto our podcast. I'm really
yeah.
excited to see the developments of Thalex. And to anyone who tuned in, thank you, and we'll see you next time.
Yeah, and then don't forget to mention, Greg, that we're also listed there on Ember Data, right? So like
Yes,
before you come on Thalex and take positions, of course you got to first form a view via Ember Data. So
100%. We're really excited to integrate your data and have all your vols marks
yeah,
and your futures. Love it.
awesome.
Thank you,
All
everyone.
right, ciao.
Bye.